Welcome to the latest Motley Fool Scoreboard. I'm Anand Chokkavelu, and we've got longtime fools, Matt Frankel and Jason Hall, giving a 1 to 10 rating to the company that's never late, SiTime, ticker symbol SITM. Talk about the business first, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Matt's at an 8. Jason, you're also at an 8.
Yeah, what I particularly like about it is that it's important, but not necessarily a massive market. And I think that, and it's specialized, so I think that does reduce the risk a little bit of competitive entry. But from its current size, it can really expand. This is the leader in the modern tech approach to precision timing with semiconductors.
Yeah, I also said an 8. I like this as kind of a sneaky AI play. As you know, as AI systems and Internet of Things, products and 5G technology and autonomous vehicles, as they get more advanced, the need for more and more precision timing grows with it. As Jason mentioned, they're the leader, and they pioneered the semiconductor-based timing industry. But they only have about 2% of their market so far. Most of it is kind of legacy quartz-based timing solutions. They're not profitable yet on a net income basis. On an adjusted basis, they are, which is the big reason I didn't give them a higher score. But they are a leader in their industry, and they produce a superior product.
For what it's worth, quartz is a 7 on the Mohs scale of hardness. Silicon, only a 6.5 to 7 based on my shoddy internet research. Let's move on to management. A 10 is Warren Buffett. A 1 is Homer Simpson. Both of you have 9s.
Yeah, so they're not exactly a founder-led business, but their CEO, Rajesh, I don't want to say it wrong, Vashisth has been at the helm for 18 years. He's been in with the business since before it made its first dollar of revenue. The company just went public in 2019, and since then, it's been an 800% total return for investors. So he's doing something right.
Yeah, sometimes almost founders or maybe modern founders are better than actual founders. You can look at Howard Schultz, who's considered the founder of Starbucks, but wasn't the founder. And you can look at Rich Templeton, who took over Texas Instruments in the early 2000s. And his footprint is all over that business. His handprint, his fingerprints are all over that business. So it's pretty clear sometimes when you get the right person and they've earned a really, really high score. And I think that's the case here.
Elon Musk at Tesla.
There you go.
For financials, a 10 is a fortress. A 1 is yikes. Matt's at an 8. Jason, you're at a 7.
Yeah, a little lower here. The positives, gross margins are above 50%. Has returned to a pretty high rate of revenue growth as we saw a little bit of a decline coming out of the pandemic. I think it can build on and accelerate that revenue growth. And that should turn the GAAP results that are kind of weak and the cash burn into positive and improving outcomes. I think operating leverage at scale, but the reason I went with a 7 is we're not quite there yet, but I think we're right on the cusp of it.
Yeah, I gave it an 8. The balance sheet is definitely a strength here. They have about $420 million in cash and no debt. Really strong momentum heading into 2025 after a weak 2023. In the fourth quarter, they produced 61% year-over-year revenue growth, again, from a low comp. They have positive income on an adjusted basis. The valuation of about 15 times sales is really what scares me in terms of financials. But overall, it's a pretty solid business.
We'll get to valuation, Matt. In fact, we'll get to it right now. Jason, how well will SiTime stock do over the next 5 years? And how safe is it? A 10 is a sure thing. A 1 is a lottery ticket.
So 10 to 15% the range of returns. I think there's actually, despite concerns about valuation, the stock not being cheap at all, maybe the higher end, if it continues to expand. Again, talking about going from 2% of market share and being right on the cusp of starting to really get operating leverage. But the safety score, I came in at a 6 because it's the disruptor here. And you have to continue to scale up to get the results. If you don't, there's certainly risk there. And that balance sheet is a strength. Want to see them get to the point where they're not relying on the balance sheet. And the balance sheet is something that they can actually leverage and not have to live off of. And again, the stock's still 54% off of the high from late 2021. There's a decent chance 6 months from now we actually see a 5-year window where investors in SiTime lost money, that could happen again.
Yeah, I would agree with the 10 to 15% range. That's my kind of most likely scenario. But I did give it a 6 for pretty much the same reasons. That stellar balance sheet does give it a margin of safety. There's a lot of room to grow, but it does rely on disrupting a market. And anytime you have a disruptor, a true disruptor, it's really hard to give it a safety score that's in the 8+ range.
Let's move on to everyone's favorite topic. Jason, is there a company in SiTime space that you like better?
It's such a niche business and a disruptor at that. I don't want to complicate or confuse things with a company that's not a competitor. So I'll let Matt be the one to confuse everybody.
No, so if we expand it into like the broader semiconductor space, AMD is a stock that I recently bought in my own portfolio. So I'd have to say that that's my favorite chip maker right now.
Thank you to both Matt and to Jason. They've given SiTime an overall score of 7.6 out of 10. It falls just short of the magic 8.0 due to a safety score of 6, but really interesting. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Applied Materials. Till then, Fool on.